Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES continued to balance within yesterday's range, and overall, not much has changed over the last day or so. And at this point, we're in a very balanced market, and we are setting up for a break one way or the other. So on the downside, the balance area low is 10 to 12 half, and we'll be using that as the initial support as well as the short-term bull bear zone. Heading into the open, we have pre-market support 15 to 17, and holding that area will just tell us that the buy side can still step in and we can still get a move higher. And then on the upside, if we can break out above 17.5, above 19, the prior VPOC, then that market would be setting up for a upside break. On the upside, the initial resistance zone 22.75 to 24.75 is going to be key, and that marks the top of the recent short-term range. So in the event of some strength in the broader market, or at least a lack of weakness in the broader market, we can still hold this balance and then eventually set up for a upside breakout. But 22.75 to 24.75 is the key inflection point, and that's the zone that ES needs to take out in order to confirm the buy side in control. On the downside, the 10 to 12 half area is key. That again marks the bottom of the short-term balance, and at this point, if we break down below 10 to 12 half, that can result in short-term long liquidation down into 2104, the 02 half, and 99 to 01 half. So as far as the downside goes, if we break 10, the first main inflection point is really down at 2099 to 2101 half, and then we still have strong support at 93 half to 96, and then the really larger time frame bull bear zone is 90 to 92. So the strong support and the bull bear down here in the event of a wide range move down can still stop the downside and turn things around. But for now, heading into the open, short term, the market is just stuck in this range, and it is setting up for a break one way or the other. It's unlikely that we're going to continue balancing in this very narrow range. So most likely today we will get a move out of this balance one way or the other, and in order to get a sustained breakout, we should see some level of strength on the advanced decline. Now it doesn't have to be extremely strong in order to get that breakout, because the previous close is right at 2175. So as long as we're not seeing any weakness on the AD, that could be sufficient to get a upside break. But if we're seeing a lot of weakness similar to yesterday, then we need to be more cautious and more careful. And if the momentum is also negative and AD is quite weak, similar to yesterday, then we'll even shift our focus and try to position short for a eventual breakdown below 2110. But for now, unless we're seeing some clear signs, it still makes sense to be cautious on the short side and still look for a good location on longs. So right now the market is in a very balanced state, and we need to be open to either direction, upside or downside, because at this point it can really break either way. And we've seen that the buyers have stepped in and defended the bottom of that balance, which was the bull bear zone yesterday. But at this point, it's just very two-sided. So we're still going to continue giving a bit more edge to the buy side, but today, if we open again on very negative internals, negative momentum, then we'll be a bit more aggressive on the short side too. So those were the main ideas heading into the open. On the econ front, we have a couple of reports due this morning, Chicago PMI and consumer sentiment in the first 30 minutes. So just be aware of that. Aside from that, we'll just keep an eye on 15 to 17, 10 to 12 half to help us figure out which side is being more dominant, and then we'll focus on trading in that direction. So those are our main thoughts. Let's see if the buy side can maintain control, and if we can still get a breakout above 22.75 to 24.75, and we'll take it from there.